Thanks, Chrissy. Good morning, everyone. Great to see you all here. And good morning to my panellists. Great to have you up here on the stage. And thanks for the introductions. Look, I'll jump straight into it. Craig, we've had a pretty interesting year in terms of the price spike with gold and copper. How do you see that translating to, I guess, capital market investment in those commodities?
Yeah, thanks, Josh. Well, it's been a very interesting market for the first 6 months of this year. There's been over $5 billion of capital raised in natural resource companies, and out of that $5 billion, probably about 60% of it has gone into capital raisings in gold and copper specifically.
That is a fair percentage. Is there a particular breakdown between gold and copper? Is there a favourite?
The split is about 50-50 in terms of those capital raisings. So what we've seen large producers raise capital. We've seen a lot of M&A activity as well, and we've seen it all the way down to the junior end as well, with Kingston Resources raised some capital early this year to fund their open pit project. And there's a lot of opportunity, I guess, in the market with the prices being 30% up since the start of the year.
Great. My next question's to the Explorer, Kath. So is this level of investment giving you confidence that you'll see some of either the current or next wave of investment as a junior exploration company?
Yes, well, I hope so. It's been a reasonably slow start to 2024 for juniors. Not a huge amount of investment, specifically in gold, copper, right at the tail end of the market. But with this increase in the current gold, or the high gold Aussie gold price, and the rising copper price, I think we're seeing the majors consider their positions, and specifically their inventories and their strategies for gold moving forward. I think investment is probably not high for retail at the moment, but what we're going to see is some industry coming in, with those majors investing in junior companies with really good exploration projects. Killy's a really good example of that. We've just completed a $13 million deal with Goldfields, which is great for us. It's on a WA gold project up in the Tanami. They not only have completed that joint venture earn-in staged agreement, they've also put $500,000 into the company as well, which is really great because that means they're then leveraged to another gold discovery at our 2 projects in Queensland. So I think we might see a bit more of that style of investment in the next 6 to 12 months, which is really great for juniors.
Certainly nice to have a bit of extra cash in the bank.
Always.
As Craig alluded to, Andrew, you guys recently underwent a cap raise to the tune of $4.6 million. How did you gauge that capital raising experience compared to others in recent history for the company?
Yeah, there's definitely better sentiment and interest in the cap raising. So we actually did 13 and a half, so 8 million in a placement and then 4.6 for shareholders in a rights issue. And the uptake in the rights issue from shareholders was a 100% increase on our last time. So that's a really good sign. But the whole placement, we did it at 6.5 cents, and we're trading nearly 8 cents now, and we haven't really traded below 7 cents. So for the first time, for a long time, we're trading above a capital raise price. So there's a really good positive sign, I think, for where we're at in the cycle, and things feel like they're starting to bottom. There's a bit more interest.
Yeah. Thanks, Andrew. And I guess at this point in time, we spoke a couple of weeks ago, and you mentioned that there had been some, I guess, operating constraints, your mine being in New South Wales, particularly coming off the back of COVID. Can you elaborate a little bit on what some of those constraints were and how they may have eased in recent times?
Yeah, absolutely. So we purchased the Mineral Hill mine in early 22, so started looking at it in mid 21. So we've got sort of 3 years of cost data. Reagents over 3 years are between 30 and 50% higher. That's a huge cost increase that the industry has to absorb because we're price takers on gold and copper, obviously. So that has settled down. Those reagents aren't dropping in price, but they've stopped going up. We have over 100 people now in the company. Wages in 22, 23 were 7 to 8% increases, maybe even a bit more depending on the key positions. Then the following year, sort of 3%. Currently, it's feeling like it's 2.5%, 3% wage increases that are going to go through the sector this year. So again, still going up, but stopped increasing in terms of momentum or growth. So, and equipment, you can actually get a bit of equipment now. So there's some examples of what has settled down. The prices of equipment are still very high, but it's settled down. We're owner mining, we don't use contractors, but when we have got contract pricing, they were exorbitant in the last 2 or 3 years. They've definitely changed now. They are now starting to sharpen their pencil, the contractors. So there's some examples. It's not coming down. Our costs are not going to drop, I don't think, as a sector, for gold and copper producers, but at least they'll stop going up. So margins should expand with these move in metal prices.
Excellent. Certainly some positive movement there. Now, Kath, your company's in an interesting position because you've got 2 projects here in Queensland and 2 projects back in Western Australia. What are some of the key, operational differences you see between the 2 jurisdictions?
Well, I concur with what Andrew just said about some of the exorbitant costs in the last couple of years. WA had some really extreme limits met, 2022, 2023. At some points, contractors were charging or tendering 2 to 3 times what a normal survey, assay, drilling costs, anything to do with exploration was really extreme and unachievable for a lot of juniors. So costs is a real difference between WA and Queensland. WA had the extremes and Queensland really saw it just a sort of market increase, which was not exorbitant. The other difference I have noticed operating in WA is access and approvals, government approvals in WA has become more taxing than it is in Queensland. Queensland's processes are actually quite standardised and quite easy to navigate. They can be laborious in some parts, but generally are quite fast-paced to get on the ground and complete exploration. So they're the 2 main differences I can see to date, and that's sort of the last 24 months. 24 months of operating.
Okay, so Queensland open for business. Come and explore in Queensland.
It's definitely my preference.
I just want to turn the conversation to copper briefly. My next question's for Craig. Look, it's pretty widely known that demand for copper is going to outstrip supply based on current global mining operations. What do you think needs to happen to get more of the red metal into the marketplace?
Well, right now, last year, the tonnes for copper production across the market was about 22 million tonnes. And that growth rate is expected to project to 36 million tonnes in the next 7 years. So the average growth rate for that market is going to be about 9% per annum for the next 7 years. How is that going to happen? Well, existing production from existing mines, I think what we're seeing is a lot of the majors are merging rather than exploring. So they're finding assets that are a lot further advanced down the chain. From discovery to production usually takes a lot of time. So a lot of companies are starting to look at acquisitions within that market just to see, where production can improve and also boost production. But what we're also seeing is out of the forecast production over that period, there's still going to be a 20% gap between demand and actually what is getting produced out of the ground. So that other 20%, there is going to have to be a lot more exploration activity occur across the market, and similar to what you guys are doing in Queensland, I guess.
Thanks, Craig. So, and the next question is for you, Andrew. As a producer, do you think there's going to be greater acceptance of lower grade copper material to help fill that 20% gap that Craig alluded to?
Absolutely, there has to be. I mean, gold and copper grades over the last decades, 20 years, whatever you look at, have all been falling. So reserve grades are all falling. And that's why costs per ounce or cost per pound of copper have been climbing. But the big low-grade copper ore bodies are a massive opportunity, but I think people need to remember we actually need an incentive price in copper to get these built, because the current copper price is great at $4.30 or $4.50 US a pound, but I don't think, based on current capex and opex, that is enough to get these low-grade projects built. We saw it in lithium, we've seen it in iron ore, we've seen it in nickel, we see it in every commodity. At some point in the cycle, we will get a move in the copper price that'll bring these projects into production. We haven't experienced it yet. $4.50 copper is not going to bring a lot of these low-grade projects online. So that's really good for us, because we've got a producing mine which is going to be producing copper soon. But to get those new ones online and get a return from investors, we need a high price. All the copper M&A is just meaning the major copper producers get more exposure to copper. They're not actually bringing any new copper tonnes to market at the moment, and that's a real concern. But it's good for the copper price. It's going to go up.
And so does Kingston see the M&A activity as a threat or an opportunity?
Massive opportunity.
Okay. Kath, obviously you're looking for copper here in Queensland. Does that real, global demand and the need for copper in the future to help the world transition to a greener future, is that what drives you as an explorer or an exploration company?
Yeah, absolutely. The EV market and what it is it's going to be our future, and whatever battery we end up going with, regardless of what style, it's all going to need copper. So that's what's driving us in our projects currently in Queensland.
Thank you. And I just want to talk about the precious metal briefly. Craig, demand for gold's been increasing, particularly from central banks. I think there was a survey put out by the World Gold Council yesterday that the central banks see that 29% of central banks believe that they're going to increase their gold reserves over the next 12 months. And I think we've also seen demand go back up for gold for jewellery, particularly coming out of China and India. So prices have been strong year to date. Where do you think they're going to go from here?
Look, I think 30% increase in gold price over the first sort of 6 months of this year. I think that's actually been a reflection of something that's been necessary. Obviously, we've seen costs and inflation increase over the last 2 years, and the gold price didn't move. So what we're seeing now is obviously the gold price reacting to stuff that's happened historically, and I think longer term demand is there. Reserve bases are growing for many countries. China's obviously a big driver of that market as well in terms of purchasing gold. I think silver also will play into that, because sometimes if gold is too high in terms of value, people look for alternatives, and silver might be another growth opportunity. And we've seen silver price up 30% in the first 6 months of this year as well. So that's actually starting to outperform. Absolutely.
And do you think some of those junior gold exploration companies might be subject to some of that M&A attention as a la the copper industry?
Yeah, absolutely. I think we look at those markets and those opportunities all the time, but there is plenty of good stories out there with projects that are real, projects that are mining licence, projects that are near-term producing, and have the opportunity to sort of leverage that into a bigger play. So I think there's exciting opportunities ahead, especially in the Cobar Basin.
I'll open up this last question to all of our panellists. So for investors seeking, reward from either the red or the precious metal, being gold, what should they be looking for in companies that will give them the investment edge? Start with you, Craig.
High quality management and a good deposit.
Couldn't agree more. Technical team that has strong management, really good projects, and a really strong focus to move their share price forward.
Yeah, it's a similar theme. I think having an approved project, having a team of people that can deliver it is the key right now. As Kath alluded to, approvals are very hard no matter where you are. Like getting a cyanide licence in New South Wales is almost impossible. And that's the sort of thing you need to look for and keep in mind when you're looking at people talking about projects and assets. Getting those key approvals takes a lot longer, and getting those key people to deliver it. I can't do anything at Kingston without my team, so they're the number one.
Putting the people first. That's all from us. I'd like to thank the panellists for sharing your perspectives and insights. Much appreciated. For those in the audience, you can catch Andrew from Kingston later in this session at 10:15 presenting. Cass presenting tomorrow at 10:45 in the morning session. And I'm sure Craig will be floating around for the duration of the conference with his team, Wilson. So thanks again for the opportunity, Vertical Events. Thank you for hosting. And we'll hand over to the first presenter of the session.